Yo, what's going on, Intellectual Savage family? Hey, I always want to thank, before we start, I always want to thank everybody who's subscribed to the channel, everybody who's viewing, everybody who comment on the polls, and the whole nine. Hey, I appreciate y'all tuning in today, and we are going to talk a little bit about crypto, FTX, fraud. What does it mean for the crypto market? And all of that. We're going to touch bases on all of that and hopefully get some feedback in the comments to get y'all thoughts and opinions of what's going on. And I'm gonna give y'all some gems on what I do to minimize my risk in this crypto space that we're talking about, because we've been watching the news. A lot of people have been losing their draws out here, and y'all definitely want to keep y'all financial undergarments on. You don't want to lose your financial draws out here when you're talking about crypto. As always, I'm a licensed attorney, but I am not your attorney. So this isn't legal or financial advice. I'm just giving my opinion and take on financial topics and letting y'all know what we got going on over here in the household of the debt-free dad as we are on that journey to become first-generation millionaires. Now, let's talk about it. Over the past few days, we've seen a bunch of crazy headlines. FTX have shook up the crypto market, and all the bottom is falling out of crypto, even though the bottom has been falling out for 370 some odd days now. But we want to talk a little bit about it, what's going on, what happened, why NFTs were selling in the Bahamas for $9 3 weeks ago, but a couple of days ago we're selling for $888,000, $1 million, all that. So let's start from the beginning, okay? FTX is a centralized crypto exchange or crypto platform. So it's one of those high-speed things you can put on your app. Everybody always say my phone look big as hell, but I got one of those tablet phones. But FTX is essentially one of those centralized apps you can put on your phone to buy and sell crypto. There are a lot of them out there. Crypto.com, Coinbase, the one that I use that I actually have a link for in the description box. Voyager, Celsius, Binance, the list goes on and on. Now, this isn't new territory. I did some video months ago where a lot of these centralized crypto exchanges were going under and filing for bankruptcy. I did videos on Celsius's demise when they ended up filing for bankruptcy. I did a video talking a little bit about Voyager. I did a video where I asked, could your crypto platform potentially be going, bankrupt, belly up? Because y'all know the one that I use is Coinbase. Well, that's the one that I use. Hey, what's going on, Dimitri? I appreciate you tuning in, brother. But Coinbase is the one that I use that I really feel the most comfortable with, that I think has the best institutional structure and integrity of all of them out there. I have another one that I use, but I just dabble around in that one, and never see me talk about it because honestly, I wouldn't recommend that one. Hence the reason I'm not talking about it. But that's what FTX was. It was a centralized crypto exchange. So we're going to refer to our major player, our major fraudster as FBF. We're gonna refer to him as SBF. We're gonna just go by his initial because his name's too long. I'm not gonna keep saying that. Well, essentially what happened is SBF had two companies. He had company A that he was working essentially as a cryptocurrency hedge fund, so to speak. And then he was the CEO of FTX, this crypto exchange. Now, let's talk a little bit about company A that he had. What is a hedge fund? Let's just think about it. What does the word hedge mean in the financial space? Bets, risk. You want to hedge yourself, try to protect yourself. So essentially, what happened and what caused this entire debacle was he had over leveraged himself, making a lot of risky plays in his company that wasn't FTX. And so let's put this in the context. How can I put this? Commodities are kind of analogous to going to Vegas. You know what I mean? And what I mean by commodities are analogous to going to Vegas. When you go to Vegas, you can make a bet on how many times a particular commentator will say his catchphrase as he commentates the Super Bowl. And so commodities in the commodities market, when you talk about stocks and crypto, mortgages, anything that has a value, you can make some wild bets. Let's take a look back to 2008 when the financial crisis happened. What happened? Well, essentially banks were taking a collective pile of mortgages and making wagers on them, whether they will default, whether they won't default. And so that's essentially what hedge funds do. They take a large amount of some particular commodity, and when they start to over leverage it, get a little risky, they may be making risky bets as to whether this will go up, whether this will go down, whether these will default, whether these won't. So, as SBF accumulated billions of dollars in debt in his company, what do you think the natural froster thing is to do? Well, the natural froster thing, and I know this because I represented a bunch of low life Ponzi scheme guys and I put a bunch of bank CEOs in prison. So, the natural froster thing to do is, oh shit, oh snap, my bad. I lost $10 billion over here. Where can I get this $10 billion to replace it and put this money back? Now, again, a lot of the funds were used on lifestyle, but a lot of funds were used to actually try to fill this $10 billion hole that he created when he actually made these risky plays in his company. So, what did he do? Everybody who invested cryptocurrency, who purchased cryptocurrency on the FTX platform, essentially became his own personal bank. He took those funds, those billions of dollars of investors' money, tried to move it around to satisfy some of his debts and risk and obligations over at his other company. And the CEO of Binance is really the person who pulled the plug on him. I don't know if y'all know how the whole thing played out, but the CEO of Binance, this was genius. He sent a tweet and he essentially said, "Hey, we aren't dealing with FTX in short uh, for various reasons." And because that tweet came out, what happened? Everybody who had money in FTX got shook and they went to take their money out. Now, herein lies the problem. You think you have cryptocurrency over here, but this guy took that cryptocurrency to live a lavish lifestyle and satisfy some losses over in this other company. So when this Binance CEO sent out that tweet and it caused everybody to run, everybody who had crypto on FTX to go over there and pour their crypto out, shit wasn't it wasn't there. Not that it's funny, but that's just kind of how this thing's work. So eventually, hey, everything was stopped. People couldn't get their money out, and it created this entire problem. Well, what is causing the crypto market to actually go down? Now, let's talk a little bit about centralized coins versus, decentralized coins, right? Bitcoin is a decentralized cryptocurrency. Ethereum is a decentralized cryptocurrency. 98% of the things you'll invest in out there are decentralized. Essentially, what that means is it's not controlled by one institution. I did videos on this before. Cryptocurrency is essentially controlled by the users on the blockchain. They verify the next block in the chain through these proof of stake, proof of work. But they essentially, anytime a transaction is done, that digital transaction is recorded on the ledger and that transaction is verified. So you can't game the system. There theoretically is a way you could game the system, but it would be damn near impossible to do. So those are your decentralized coins. Well, when this FTX things turned into a tide debacle, centralized coins took the hit. So what the hell is a centralized coin? You have a company like crypto.com, who the Lakers arena, they bought out the Staples Center, what it was. So, but crypto.com developed its own digital token, Crow coin. Same way, FTX developed its own digital token. And so when you have a centralized platform, a platform that's ran by one or a group of people like FTX, like crypto.com, when these centralized, because everything is centralized on the ownership, the leadership, when these centralized platforms create a digital token, that's a centralized token versus a decentralized token. Who controls everything related to crypto.com coin? The damn people who run crypto.com. Versus Bitcoin is nobody who runs Bitcoin per se. It's kind of a network thing, peer-to-peer, blah, blah, blah. So those are the difference between a centralized coin and a decentralized coin. Well, because FTX, hey, their CEO committed a big ass act of fraud. Essentially, he did what Bernie Madoff did. It is your typical Ponzi scheme. Ponzi schemes, they either use customer funds to fund their lifestyle, or they use customer funds to pay off other debts or to repay other investors as long as they can get new money coming in. And this was the same problem as with any Ponzi scheme. Once Binance CEO put out this tweet, nobody was buying anything on FTX, so there was no new income coming in, so money couldn't get replaced. Hence, the house of cards got knocked over. So when FTX went down, the FTX centralized coin took a hit. Who the hell? If FTX is doing fraud, what do you think that their coin is worth? If DFD, debt free dad, created a DFD token, and y'all found out that I stole millions of dollars from millions of monies, I stole $1 million from my investor, what do you think my token is going to do? It's going to plummet. People are going to want to get off of it. So that's what happened to these centralized tokens. So you see FTX token bottom out. You see in crypto.com, Crow token bottom out. You see all of these centralized tokens that are ran by these centralized exchange app where you can buy, sell crypto started to bottom out. And that essentially caused the crypto market as a whole to just kind of plummet and go down. Now I tell y'all, since the crypto market been getting stomped out for the past 2 days, I made a purchase, and I added some Bitcoin to my portfolio. I added some Anchor to my portfolio. So that's kind of what I'm still doing. Now that's in short what happens. It's your typical Ponzi scheme that was done. BS happened, hey, there's always some big wig at the top to steal. Now, the next thing I wanted to talk about was the unique ties to the Bahamas and why is the Bahamas relevant? Because I actually read an article out there after this entire thing happened with FTX. There were a unique buzz and pickup and influx in the sale and purchase of NFTs in the Bahamas. And I was like, this is interesting. What is causing this? Literally, people who purchased NFTs or NFTs that were selling for $9 3 weeks ago were selling for millions of dollars, $888,000. And I couldn't figure out why. So, of course, I had to do a little bit of research. Well, in short, FTX has a vast majority of its corporate headquarters in the Bahamas. Now, why would you want your corporate headquarters in the Bahamas? Why were these strange NFT transactions going on in the Bahamas? Hey, I was able to put two and two together just through some open source research. But Bahamas has strict laws as it relates to the Bank Secrecy Act, as far as divulging who owns what account, providing certain notification. It's potentially possible that even through a bankruptcy, they may not be able to, the federal government may not be able to find and identify all of the assets that are owned in the Bahamas by SBF, the CEO who committed this fraud, and other key players and perpetrators, i.e. his girlfriend and this crazy group of collective friends who were defrauding this program. So that's why they had a lot of their headquarters located in the Bahamas, because the Bahamas has, I guess, enhanced laws with regard to banking. Now, why in the hell were $9 NFTs selling for $800,000, $1 million? This was interesting. So, hey, what's going on, sis? Hey, condolences to you as well. So I wanted to go ahead and say that, and definitely prayers and everything going with you along the way. So like I was saying, so now that we know why they were in the Bahamas, why the hell were NFTs that were selling for $9 3 weeks ago selling for $1 million? Well, let's think about this. Trading on FTX came to a screeching halt in the United States. However, in the Bahamas, transactions were still able to be made. Certain transactions were able to be made, and you could facilitate transactions related to NFTs. So essentially what happened, and I thought this was actually kind of smart. I think they made it come to a screeching halt now, because I think things have stopped with the trading and the purchases of NFTs in the Bahamas. But essentially what would happen is you had someone who had a lot of money in their account with this crypto platform that's going under, right? And I can't sell anything that I got in the US. But over in the Bahamas, they can sell, they can buy, trade, and we both mutually can do transactions related to NFTs. So what was happening is a person in the US who money was locked up, they would use the purchase and sale of an NFT along with a third party in the Bahamas, as a method to actually obtain their money, and of course pay a kickback to the person in the Bahamas who are helping them to facilitate this thing. Like, damn, I got $800,000 in this FTX account in the US that I can't touch, but I can purchase and sell. I can purchase and sell NFTs. How can I get my money back? Let me hit somebody up in the Bahamas who got that bread. Hey, I need you to help me with a transaction. If you help me with this transaction, it's $1 million transaction. Help me with this transaction so I can get my money back via this NFT purchase, and I kick you 10%, of that $1 million. I give you $100,000 because I'd rather get 90% of my money back as opposed to not be able to touch 100% of it. So that was the whole reason why the Bahamas has played a big point, a big point of discussion in this entire thing, because hey, they have stricter laws as it relates to banking and banking disclosures. At one point, they were still allowed to make transactions. So NFT sales have been plummeting. It was a whole phase that I never understood, and they have been plumbing. But we've seen this increase over the past few days in the Bahamas, and that's why people in the U.S. were using the sale and purchase of NFTs along with third parties in the Bahamas as a way to get their money out of a frozen FTX account, and they would pay a kickback to the person who helped them facilitate that movement in the Bahamas. So let's talk about how big is this fraud related to crypto and what you can do to hedge your bet. Okay. Now, from a standpoint of, am I still a purchaser of cryptocurrency? Yeah, I just told y'all, once I seen Bitcoin was down 20 something percent a couple days ago, I was like, buy. Once I saw Anchor down 20%, I was like, buy. I'm gonna continue to buy because I've done things, and I'll talk about those a little bit later, as a way to protect myself. But the bottom line is, there are always going to be bad actors. This is essentially the equivalent of what Bernie Madoff did. Bernie Madoff, it was something, I want to say 4.5 to 4.7 billion dollars worth of fraud. And although the stock market has been around a lot longer than cryptocurrency, Bernie Madoff committed his fraud. He's long gone, and he's long gone by now, and the stock market is continuing to do what the stock market does, even though it's kind of on a downturn right now. But the stock market is going to continue to do what it's do. I feel the same way personally about cryptocurrency. You can have any institution that has a bad actor to defraud something. I don't think that I don't think that cryptocurrency is just going to be banned by the United States. I don't think that it's just going to go away, never to be seen again. One, there's too much money to be made out there. There is going to be some regulation that's probably going to come in place to prevent these type of things. But like I always told you all, I think regulation in the crypto space is really a good thing. Right now, the real only regulation with crypto is when you sell it, you got to pay taxes on it. That's not a regulation that you got to pay taxes on. Honestly, you got to pay taxes on most 99.9% of the stuff you sell, unless there's an exception, because those proceeds would count as gross income according to the tax code. So the fact that you pay taxes on crypto sales isn't a regulation. Cocaine has more regulations than cryptocurrency, because hey, if a drug dealer sells cocaine, he's supposed to pay taxes on it too. But there are other laws in the book related to the distributing, the possession, the sale. So right now, cryptocurrency, the only thing that has some governance is when you sell it and make a profit, you got to pay tax. That's common sense. That's like anything else. If you sell a house, if you sell a stock, you're going to have to pay taxes on it. But I think regulation is going to be good because, for the people who are scared to invest are going to feel more comfortable once the government comes in and creates some regulations. Regulation give people confidence that, okay, there's some regulations in place that'll kind of insulate me and protect me from completely getting my financial underwear ripped off because I made a bad crypto investment. Now, who's going to be regulated? Well, you can't regulate the currency because it's decentralized. Like I said, it's not owned by one institution. But there will be regulations as it relates to probably crypto exchanges, what crypto exchanges can and can't do. So it's really going to be interesting to see kind of how this plays out. In the long run, I personally don't think that if you've already been investing in crypto, chances are you're probably going to continue. Some of the things that I do to just kind of reduce my level of risk, and this is just common sense because I've seen all these people, Tom Brady, Steph Curry, they all were doing ads for FTX telling you, yeah, get this exchange FTX. It's the easiest way to buy and sell crypto. Anytime you see a celebrity doing an ad for something, you should be like, because they don't know it. They got a big ass check, probably got some shares of the stock of that bogus coin or something to that effect. So you always have to use your own independent judgment. Me personally, what I do is cryptocurrency is probably about 2 to 3% of my overall net worth. So I'm fine with putting a couple of dollars here, a couple of dollars there. Personally, my number is 5%. I would probably never make cryptocurrency more than 5% of my overall investment portfolio. So, if I had, let's just think about it. If I had $10,000 of total money invested in my investment portfolio, I would probably have 500 of that in crypto. So if something did happen, I won't have to eat top ramen. Even though you can slice top ramen up, top ramen is but I trusted Hove. Hove lied to you. Holla. Oh, hey, yeah, you can't trust the celebrities who get cut a check to, and we've seen this quite often. We've seen a lot of celebrities, they'll actually pump up. And this was actually a lawsuit. A lot of celebrities got sued. I think some of the Kardashians was in this lawsuit, but a lot of celebrities got sued for hyping up some trash coin over on social media. And then when people jump in and all of their followers, because they're influencer, buy this coin, when the price run up, all of the people in the loop sell it. And these lowly guys who spent $100, $200, they left holding the bag when the coin plummets and goes to zero. So as far as it relates to investing in crypto, only put in what you are willing to lose or what you don't really care about. So, whatever I put in my crypto portfolio is just kind of like in a black hole. And I know that it's just over there. And hopefully, fingers crossed, if the trend continues, because we're at about 370 days from the bottom, from the crypto market being down. The last crypto winter lasted about 420 days, 421 days is a good breakdown. If you go check out Stocks with Josh, great guy. I had a chance to meet him, great channel, but he did a great breakdown. So, we're about that time frame where the last crypto winter kind of came to an end. I'm not saying that this one's going to come to an end at that same time, but because I limit my risk, limit my exposure, I make crypto a small allocation of my total investment portfolio. If it goes down and went down to zero, I'm gonna be pissed because I don't really want it to go to zero, but I'm not gonna, like go ram my head through a window or something to be stressed the hell out, not eating top ramen for 6 years or anything like that. So limit the amount of your total investment portfolio that you want to put into crypto. The other thing is you have to do your research on what you're investing in. Just because somebody tells you, oh man, this coin is named after Elon Musk, go buy it, put $1,000 on it. Don't do that. It's probably not a smart thing to do. You always got to use your due diligence to make the right decision and the right choice. So I think that's kind of where this whole entire FTX thing plays out for me. Was it something that terrible? Is it a terrible situation? Yeah, it's a terrible situation. But I think this situation that happened with FTX is, I'm more concerned with what happened to Voyager and Celsius, those platforms that crashed. Because I can wrap my mind, as someone who's been in the financial fraud industry for over a decade, I can wrap my mind around a collapse when the CEO clearly blatantly does something bad. You know what I mean? Like, yeah, if you do something bad with your company and risky, and eventually when the tablecloth get pulled from underneath you, all the shit gonna come down and break. That kind of makes sense to me, and I can wrap my mind around that. I think the Voyager and Celsius filing for bankruptcy was probably a little bit more concerning to me personally. But the other thing you got to think of is this entire thing of crypto platforms filing for bankruptcy is completely new. Okay. So it's completely new. So you have to understand, if I use Coinbase, that's the platform I talk about. That's one of the only very few links I have in my description box. I use Coinbase because it's an easy platform to use, and I trust the direction that their leadership is going in. Now, that doesn't mean I can't wake up tomorrow and Coinbase be like, oh man, we filed a bankruptcy. Because every time a crypto exchange filed for bankruptcy, if the CEO of your exchange or any company goes public and says, don't worry, everything is okay, we have enough money, we are solvent, run for the hills. That's the universal distress sign for we are screwed royally, and I'm trying to run to the Cayman Islands with as much of y'all money as I can. That's literally the universal sign. Celsius, Voyager CEO, FTX CEO, anytime they come on and make that statement, 24 hours later, it's a major collapse. So that's a big red flag. But like I said, I use Coinbase. Coinbase as an app is probably one of the more stable apps, but is a possibility that they could file for bankruptcy. And so, what's been going on in the bankruptcy space? If you are using a crypto exchange that files for bankruptcy, essentially investors are being treated as unsecured creditors. What does that mean? Essentially, when a company files for bankruptcy or an individual file for bankruptcy, they create a list of priority of who's going to get paid back their money first. Unsecured creditors are people way at the back of the line. So there may or may not be money there to give you compensation to make you whole. So if you're treated as an unsecured creditor, let's say I had $100,000 in FTX, they filed for bankruptcy. I'm treated as an unsecured creditor. After they broke down everything, all of the company's assets, paid off all the secured creditors, I might be lucky if I got back 30 cents on the dollar because I'm at the back of the line as far as priority go. So that's kind of the standard as how crypto investors on these platforms have been getting treated. Now, one thing you can do to protect yourself, and I have mine. Where's mine? It's right here. You can purchase one of these. Cold wallet. What is a cold wallet? A cold wallet, essentially, when I buy cryptocurrency on any of these platforms, I take it off that platform and I put it on this lowly device right here. So as long as I don't lose this device, or even if I lose the device, as long as I have my password, I can access my cryptocurrency. So in the event that my crypto platform of choice decides to do something stupid and they go bankrupt and everyone's losing cryptocurrency, at least I can have my actual currency on this cold wallet so I know it's secure. Now, that doesn't do anything as it relates to the value of the cryptocurrency. So if I got 2 Bitcoins on my cold wallet, my crypto exchange does something stupid and file for bankruptcy and the price of crypto drops, yeah, my crypto on my cold wallet, that Bitcoin is going to drop as well. But at least I still have it versus I can't sell it now because it's stuck on that platform. So that's kind of how this whole FTX thing's played out. At the end of the day, you always got to do your own research. You always don't trust the words of celebrities or anybody, including me, including me or anybody else on YouTube. Y'all know how many YouTubers, I was watching a video today on YouTube, and I've seen YouTubers out there, every platform that filed bankruptcy, at some point they were like, sign up for this one, sign up for this one, sign up for this one. And again, that's not indicative of them telling you to sign up using this platform isn't necessarily indicative if it's a good platform or not, if they're doing the right thing. I just say that to say you have to be cautious of what you're doing, the choices you make, because at the end of the day, you're responsible for your own money. Nobody else gonna really give a damn about it. If you lose your financial draws in the crypto market, ain't nobody coming to the rescue for you, not the government, not anybody else. It's all up to you. So you want to make sure you do your due diligence. Hey, I just wanted to jump in and give my quick take on that. Hey, as always, I appreciate y'all tuning in. If you like this video, check out the video on the screen. It'll be something else related to crypto. And of course, I always say this at the end of my lives so it look good on a playback. Thanks for tuning in. Y'all take care. Love y'all. Peace.